Hi, Paul Gerard from Price Accounting Services. I want to talk about PAYG instalments. Wow, taxpayers don't like PAYG instalments, and I can understand why. So let's talk about how they occur, what they are, and what you can do about them. Okay, so when you lodge your tax return, most taxpayers have a PAYG summary, and so the tax office work out the total amount of tax that you are due to pay for the year based on your actual outcomes. Then it says, right, how much tax did you previously pay based on your PAYG summary? They give you a credit for that, and so you settle up the difference. And in many cases, the taxpayer gets a refund, and that will be the end of the matter, okay? But taxpayers who have to pay tax, the tax office runs your return through another process just after assessment, and it looks at how much of this income did you earn that was unearned income? So in other words, not wages and salaries and taxed at source. So for example, you might have a positively geared rental property or some interest income, etc. And it says, right, based on your 2018 tax return you've just lodged, we expect that in the 2019 year, if we assume the same numbers or similar numbers based on the inflation rate, you will still also owe tax next year. So they'll work out, and I'm going to say it's a magic formula. I don't understand how it works. I can't calculate it myself, but the tax office can, and their word's final. And so, for example, they may turn around and say, right, you're going to also face a shortfall in the 2018-19 tax period of another $1,000. So they say, right, we want you to pay PAYG instalments. Some taxpayers are entitled to use an annual instalment method, and whenever we see the letter asking to choose, we always choose that. What that does, instead of having to pay each quarter through the next year, it defers it until October of 2019. Well after the event. So by then you probably know what your 2019 tax return actually looks like, and so we can then say, right, it's too much, it's not enough, etc. We can address it at that point. But for those who are on the quarterly system, for example, because of the amount that's due, you will then, once you've lodged your 2018 return, you'll then be invited to join the PAYG instalment system for the quarters following that. So it might commence, let's say you lodge your return in September, you're going to miss the September cutoff, and from December onwards, due in February, you'll then pay 25% of that $1,000, $250 a quarter, for example, going forward. Now, when you lodge a 2019 return, they give you a credit for those instalments. Now, it doesn't, just because the ATO sent you that letter does not mean it's right, okay? If, for example, let's use the example of somebody who'd been, let's say that situation of a positively geared rental property, and now you've bought a negatively geared one that offsets it, you might have reason to say, well, I don't think that's going to happen next year. Or let's say you had interest income in a bank account and you've used it to go and buy that property and it's not going to repeat. Again, you're not going to have a reason for that income to repeat. So when you get your instalment notice, not the letter that says you're up to pay instalments, but the actual notices, we can vary that, okay? So let's say you believe you have zero entitlement or right to pay an instalment. We can vary that $1,000 to zero, or that instalment of $250 to zero, and that will be the end of the matter. They may continue to send zero letters to you for another few quarters, but when you then lodge the 2019 year return and it confirms it, they'll withdraw you from the system. So I hope that helps. It sort of does explain you can fix it. But the one thing we can't fix is we often get asked by taxpayers, I don't really want to pay it. Yep, I don't like paying tax either, but I'm afraid there's no valid reason to vary it, and it is subject to penalties. So just choosing to vary because you don't want to pay it, I can't assist you with doing that. And if you do it, you could be facing penalties. The ATO can impose penalties of up to 40% of the amount of tax that should have been paid. So that $1,000 could end up being $1,400 plus interest. So wise perhaps not to do that without seeking some advice. And if you do have genuine, legit grounds to vary, we welcome your call. We can assist you with doing that. That is an extra service we can provide, and we commonly do it for our clients to make sure that they're paying only enough tax to meet their obligations. We don't believe it's worthwhile paying more than you need to pay, because I don't think they spend it that well. I think Kerry Packer said that one. So we hope that's been helpful to explain PAYG instalments, and if you've got any questions or anything, your clients, give me a call. More than welcome to assist you. Cheers. Bye.